Well, listen, thank you for that, Leanne. Well, if you have some extra money saved up and you're hoping to expand your investment portfolio, maybe hold on to your wallet until after today's financial segment before you make a decision, because our guest today has some interesting points of view to share.
So from a young age, we're always told that property is a fantastic investment and we would all love to own our own home. But is it really such a good investment as people say? Well, Warren Ingram, certified financial planner and author of How to Make Your First Million, reckons that this might not necessarily be the case. And as I pick my jaw off the ground, Warren, I ask, why on earth would you say such a thing?
If we look at the price of properties and we go back over a long period of time and we compare what properties have done against things like the stock market or property companies that trade on the stock exchange, what you find is shares, all the shares in the stock exchange would have done about 3 to 4 times more. They would have grown 3 to 4 times more than the price of houses over the last 20, 30 years.
But the risk is not so much in property, whereas the shares could plummet tomorrow. Your property would still be intact, right?
No. So that's really the thing. So if I said to you, you want to buy a house for $2 million, give me $2 million, I'm going to put it all into one share, into one company. You'd say to me, look, that's kind of risky. You're taking my whole life and you're putting it into this one share.
True.
But you're happy to do it, most of us as South Africans, we're happy to do it with one property, in one city, in one country at the tip of Africa, and you're saying that that's not risky?
Come on, Warren. I mean, no ways. No, let's quickly talk about this quickly, because when you say it like that, the property is a set asset. It's there, and the chances are over a long period of time it'll gain in growth or in value, and once you sell it off one day, or maybe even use it as, let's say, a rental, you might be able to earn an income from that. Now, you invest that 2 million rand into a stock, and yes, you could do 20% by tomorrow because something in the world happened, but the risk is there that you could lose everything if that company were to go down today.
Exactly. So if you're going to buy an investment, what I'd say to you is you always need to spread your risk.
Okay.
That's good sound logic when you make an investment decision, diversify. But when it comes to property, we don't. We put everything into one.
Yeah.
And that to me is massively risky. Yes, you can make money. You can borrow from the banks and you can put it in. But what happens when you use your rental example, the tenant doesn't pay. The tenant hijacks your building. And suddenly you've got 3 or 6 months where you're paying everything. You're paying legal costs, you're paying for the bond, you're trying to pay for your own property where you're living, and suddenly the risks really start to get hectic.
Absolutely. I guess, there are risks to each and every investment, but buying a property as your primary home, do you have the same opinion on that then?
My view is one of the mistakes we make in South Africa is, and it's kind of a worldwide thing, is we buy as soon as we can. So all our parents and our grandparents tell us, don't pay someone else's rent, don't pay off someone else's bond, own your own property, which is a good idea if you're going to stay in it for 8 years or longer.
Okay.
But if you're going to move every 2 or 3 years, you're going to get a bigger place, and then one day you're going to have kids, etc., then wait. Wait until you're going to stay in the place that you're going to live in for a long period of time. Then it makes all the sense in the world.
Okay. Tell me about those additional costs that people that buy property for investment purposes don't take into consideration that at the end of a financial year could actually add up to a big bill.
So that's really where I think we get caught up if we buy a property, because we have to pay a lot in transaction costs. So we're going to have to pay for transfer duties, we're going to have to pay lawyers' fees, bond registration costs, etc. That's just buying the place. And then you're going to have the moving costs, you're going to have the costs of fixing whatever's wrong with the property, because if you want to bargain, the chances are you're not buying the perfect place, the costs that you're going to have to incur.
Yeah.
And then you're going to have to maintain the property. And even if you live in an apartment, for example, there's still going to be levies that you're going to have to pay for the apartment block, and then your own maintenance within the place. And then on an ongoing basis, changing whatever has to happen inside the property, the cupboards or whatever that you have to fix.
Yeah.
So there are a lot of costs that come in. One day when you want to sell, you're going to have to pay agents' fees. Again, they're transaction costs. And it's often those things that we don't really think about when we buy a property.
Absolutely. Well, I'm going to ask you to just stay right here for a little while longer. We'll continue our chat with Warren Ingram, author of the book, How to Make Your First Million. In the book, he also talks about listed properties, which will be the topic of our conversation when we return.